There we go. Good morning, Wake Pray Slay community. Welcome. Today I'm so excited to get to introduce to you Drezden Palms, who is in the house with me. She is a bookkeeping and accountant whiz, and she and I met online a while back and had a conversation. I just fell in love with her story. And I thought, you know what, there's no place for you to share your story and to serve women than inside of this community, because so I is joining us for a little appearance. See you later, baby. Anyway, because we have so many incredible businesswomen in here. And so if you have struggled or had questions about bookkeeping, accounting, anything along those lines, Drezden is the professional that's going to be really in your court helping you. And I really encourage you to contact her. We do have a little freebie that's in the description that she gave to you. I checked it out. It's amazing. It's a bookkeeping guide. So make sure that you download that and get that for yourself. And then also, if you are joining us live, of course, ask your questions. If you're here on the replay, I still encourage you to ask any questions in the comments, because Drezden and me are both going to be going through those comments and making sure that they all get answered for you. Before we get started today, I just wanted Drezden to have a moment to kind of share who she is and how she got started in her business journey. So Drezden, thank you so much for being here today. How are you doing this morning?
I'm well. I'm so excited to be here. Thank you so much for this opportunity to talk with you and to share this training with other women.
Yeah, it's going to be incredible. And thank you. Thank you for doing this. It's going to be so good. And it'll be stored in here for future people to look at too, which is going to be, such a great tool. So thank you for that. I'd love for you to take a moment just to share a little bit about what you do and who you serve, and maybe how you got started on your business journey.
Sure. So a little bit about me. I actually, excuse me, sorry.
I know I have a clogging throat too. I'm just getting over a sickness.
So I actually started going to school for accounting. I worked in public accounting for a little over 5 years before God called me to start my own business. And let me tell you, I did not always think that I was going to be an entrepreneur, but God called me to bigger and greater things. And so in my experience in public accounting, there were things that I witnessed at these firms that I just didn't like. I wasn't a fan of how they were serving their clients and some of the things that they were doing. And I wasn't a fan of corporate America. I wanted more for my clients. I wanted more for my girls and for my family. And so God placed it on my heart to take a leap of faith, trust him, and start my own business. So I did just that. And let me tell you, it has been such a journey. He has been there every single step of the way, giving me my next move, giving me my foot place and everything. And it's just been so beautiful. And so now I have a huge heart to serve other women, entrepreneurs, those who are trying to build more for their families, to create that generational wealth and that legacy, and to show the world what it looks like to be a woman of Christ who also is a business owner. And so some of the services that I offer are basic and full service bookkeeping. I can help with payroll, paying bills, invoicing. And I also, for those who aren't ready to outsource, I offer trainings. So I have a Firm Financial Foundations Academy, where I just walk you through all of the specifics of your business. That way you can have a strong foundation and be set up on the right path going forward.
That is so awesome. Is that something, how did they get how do they get that? The firm, what is it called? Firm Foundations?
Yeah, so the Academy, in my little free bookkeeping guide, it's at the very bottom. So after you've looked through all of those things, if you feel overwhelmed, there's a couple different options for you to get connected with me down there.
Awesome. I love it so much. So cool. Well, without further ado, Drezden is actually here to give a training. So I'm going to actually leave the screen, come back at the end. I'm going to be taking my notes. So make sure that you take notes too. And then if I have any questions at the end, we'll go over that. And if you have, for the viewers, if you have any questions, leave those in the comments and we'll make sure to address those as well. So, okay, well, I'm going to change the screen here. And I will mute myself, and Drezden, you can take it away.
Perfect. All right, so I want to talk to you guys about bookkeeping and some of the things that I do cover when I'm working with you to just tools and things that are really important that every business owner really needs to know. And so by starting, I want to help you guys understand what bookkeeping is and why it's important. So it's basically the process of grouping all of your income and expense transactions into helpful categories every single month. And so the goal is to group these into categories so that it produces financial reports, such as your profit and loss and your balance sheet. And what this does is it generates these things so that you are able to review all of the data in ways that can help you make strategic decisions going forward. So it shows you like how much income you've generated, where all of your money is going. It can help you figure out which path is more profitable and what might be a strategic next move if you're trying to grow and scale. And so for those who are just starting out in bookkeeping, they're often, or in their business, sorry, not bookkeeping, they often ask, why do I have to do my bookkeeping? Why is it even important? It's really a non-negotiable, and every business owner really needs to do at least some form of bookkeeping, because at a minimum, you have to file your tax return every single year, and you can't do that without some sort of record keeping. The other places where it's really important is when you are at that place where you're trying to grow and you're trying to scale, you can't really apply for any business loans or types of credit without having the bookkeeping basics in place. A lot of the times, like banks or credit cards, or like if you're trying to get a line of credit, they're going to want to see your monthly financial reports. And it's generally a 2-year period. So they want to see a consistent history over 2 years. And so they're going to ask for your profit and loss report and your tax return, because both of those are going to be how you prove your income as a business owner, whereas like an employee, they have pay stubs and W-2s. And then it also helps you, bookkeeping helps you catch any subscriptions that you thought you may have canceled but never did. And it also helps you catch any fraudulent charges. So did you guys know that banks will typically only reimburse fraudulent charges that you have claimed over a 60-day period? So anything beyond that point, they're generally not going to reimburse you for, because at that point, they're like, oh, you should have done your due diligence. You should have caught this sooner and let us know. And so imagine this for a minute, that you haven't done your bookkeeping in, let's say, 6 months, and you find that you have a fraudulent charge that has been recurring for $250 a month. So over a 6-month period, that accumulates to $1,500. And do you want to know the likelihood of how much you're probably going to be able to get reimbursed for? $500 if you're lucky. So that means that you're out $1,000. Now, imagine that rather than waiting 6 months to do your bookkeeping, you've been keeping up with it on a monthly basis. You would have caught that initial $250 charge. You would have then talked to your bank and said, hey, I don't recognize this. Let's look into it. They would have reimbursed you for that full amount, and it would have stopped any transactions that's coming thereafter. And, rather than being out $1,000 or maybe like $1,250, you're out zero. And so the last reason that bookkeeping is important is because it helps you grow and scale. So again, kind of like I talked at the beginning about it being able to produce those financial reports, it helps you make these strategic decisions about growth when you have that foundation and you really know your numbers. All right, so now that I've talked about why bookkeeping is important, there's a couple other questions that are really common that I get from business owners. And that the next one is, where did it go? How much time should my bookkeeping take me? Now, this question really varies depending on the industry that you're in. So somebody who's a coach is going to take a lot less time than somebody who is a farmer and has like a ton of different things that they have to manage and different assets that they have to track. So it really is dependent on your industry. And you can think about this like tidying up your house. The upkeep is really no big deal. Like if you're doing small things on like a daily or weekly basis, it's really manageable. It may not be your favorite thing, but at least you're able to get it done and you're not really overwhelmed. But if you wait too long, it can get pretty messy pretty quick, and then it's a big thing. And so that's the same thing with your accounting. If you push it out too far and too long, it can get really overwhelming and really stressful for you trying to go back and remember things in the past. And so, for example, like a lot of the clients that I've started working with, have waited until tax season. So they're only touching their accounting like once a year, trying to get everything put into an Excel spreadsheet. And then like, oh my gosh, I don't remember. Was this business? Was it personal? What was that trip to Walmart? Was it office supplies? Was it, they just can't remember transactions that were clear back in April when it's January of the next tax year. And so if you break it up into little chunks, at least on a monthly basis, weekly is great, but on a monthly basis or at a very minimum quarterly, go in and create a block of time to really work on your bookkeeping. And by doing it in chunks, you can get a lot done in a shorter amount of time than trying to go and do little things in little tiny spurts. And so for a general guideline, independent contractors and small business owners who you haven't really gotten into the more complex accounting things like payroll or those kind of things, you should average about an hour for every $100,000 in revenue, and that's per month. And so for mid-sized businesses, those who do have a team, or you maybe are tracking inventory or things like that, you're spending maybe 5 to 10 hours per month doing your bookkeeping tasks. And then of course you would want to increase your time allotted for your bookkeeping for like extra bank accounts, any extra credit cards, loans, any other tasks that you're doing, such as payroll, paying and filing sales tax, tracking your projects, or managing inventory. So those are some of the things that would likely increase the amount of time that you're spending on your bookkeeping every single month. All right, so now that I've covered a couple of those questions, I want to talk to you guys about basic bookkeeping practices. So for business, some of the basics that I think is really important for you to know is the difference between like a sole proprietor and a limited liability company, otherwise known as an LLC, and an S Corp. So a sole proprietor is the very simplest form of business. It starts just by running your operations, just by beginning. And so this form of business is actually filed on your personal tax return, which is on a special schedule called a Schedule C. And it can be operated under your Social Security number unless you want to apply for an FEIN, which is basically an identification number for your business. But most people who are sole proprietors just run it under their Social Security number. Then there's an LLC, or a limited liability company, and this offers a lot more protection for you for all of your personal assets, which is why this is my go-to. Anybody who's starting out in business, I always recommend that they look into this. It's pretty easy to start and it's relatively low cost. And it just offers a lot more protection for you personally. Now, if you are an LLC, it's really, really important for you to keep your business and personal finances separate. Again, it's really crucial for every business owner, but for those who aren't sole proprietors, by not keeping these things separate, it not only makes your bookkeeping and accounting more tricky and cumbersome every single month, but it also could make you pierce the corporate veil. So then that personal liability protection that the LLC offers, you would no longer have that by not keeping things separated out. And then an S Corp is really just a special delegation for a limited liability company. And so the reason a lot of business owners are switching over to an S Corp is because they get tax savings. It's really only a different entity in the eyes of the government for tax purposes anyways. And so what it does is it saves you on the self-employment tax. There's a minimum required salary for when you switch over to an S Corp. And so any profit that you're making above and beyond that minimum required salary is not subject to the self-employment tax. And so this entity type actually files its own tax return, which is called an 1120S. And so it's really beneficial for you to look into switching over to an S Corp once you've made around $100,000 in profit, because the minimum required salary, like you want to make sure that your profit is well above that for it to even be worth it, because there are a little bit more expenses in like the upkeep and filing the special tax returns and like managing that special election. Okay, so after you have decided the entity type that you want for your business, the next step is to open up your bank account. Again, it's always best practice to keep your personal and your business separate. I promise you're going to thank me later. No matter how frequent you work on your bookkeeping, even if you only do it once a year, by having these things separate, it's going to be so much less stressful for you going back and reviewing all of those transactions and trying to categorize them to hand over to your tax accountant. And so as a sole proprietor, if you're just using your social security number, all you have to do is open up a second bank account in your own name and just keep them purely business income and expense transactions. Now, if you're an LLC, you would have that FEIN, that identification number, and you would just open up a business bank account with that FEIN, and it's going to have your actual business name, not your personal name. And so my recommendation on bank accounts is to have 1 to 2 max. You really only need 1 checking account and 1 savings account. The checking account you would use for all of your operating expenses, and then the savings account you could use to split up your payments a little bit easier. So if you're trying to save up for sales tax payments that come out monthly in Ohio, some states have different filing frequencies for sales tax, or like if you're trying to save up for your payroll expenses, or like if you're trying to save for your quarterly estimated taxes, you could have 1 savings account and then just transfer the funds from your operating account. That way it's accumulating and you have that cushion for you for whenever those payments are ready to come out. You would just transfer it back. Okay, so then after you've decided on your entity type, and you've decided on your bank account, the next step for you is to pick your software. Microsoft Excel is okay to use like in the first year or 2 in your business, and only for people who have 25 or fewer transactions a month, have 1 to 3 bank, credit card, and loan accounts, and you don't have complex accounting needs like you don't have any payroll, you don't have to track sales tax, and you don't have inventory. But at the same time, it's going to take you a lot longer when you have to do an Excel spreadsheet. Even if you're downloading a CSV file from your bank, you're still going to have to go through, you're still going to have to organize it and try and figure out like what category all of those things fit into. So it's going to take a lot more work for you. The next step up from an Excel spreadsheet would be Wave or FreshBooks. These are okay, again, for the first few years of business, or if you plan to just keep it as a side hustle or hobby, but they have limited accounting capabilities, and they can be problematic. Some of the problems that I've heard about from my peers, there really isn't a really easy fix or solution. They're kind of unsolvable. But the perks is they are less expensive for those who are brand new or just starting out on a low budget. And they keep things kind of simplistic, and it's a little bit more streamlined than an Excel spreadsheet. Or you can pick QuickBooks, which is my personal preference and my favorite software. I use QuickBooks Online primarily. It's the most intuitive, and it's really just the industry standard, and it's what all quality bookkeepers and accountants use and prefer. So by just starting out and going with QuickBooks Online, you can actually get ahead of the game. That way, when you are ready to grow and you are ready to scale and outsource that financial role to somebody, you don't have to lose all of that history for you. So like when you're switching over from Excel or Wave or FreshBooks over to QuickBooks, you're not going to have that history there by doing it in those other software first. Also, by using QuickBooks, it's going to save you so much time because it is so intuitive. It downloads all of your transactions from your bank every single month. It makes it so that it recognizes transactions. It'll give you suggestions on like vendor names and accounts that you've used in the past for that transaction. You can create rules where it's going to automatically fill based off of the description to a specific vendor and to a very specific account. And then all you have to do is just check a box and approve it. So it makes it very fast and efficient. And it also gives you less wiggle room for errors, because in QuickBooks, like you're able to reconcile your accounts, so you can make sure that there's no duplicates or missing transactions. And then it also, it connects with a lot of other software. So like Gusto is a really big payroll provider that I like, and it connects with QuickBooks so that all of the journal entries and adjustments that you have to make after processing each payroll, it's automatically done for you. It's just a matter of mapping it to your QuickBooks. And then it also connects with different point of sale systems like Square. Okay, so now that we've talked about those things and you've decided on which software you want to use, your bank account, and which entity type you want to be, I'm going to run through a monthly checklist of things that most business owners need to go through every single month. The first step, when you sit down and you're ready to work on your accounting, is to go through and categorize all of the transactions from every bank account that you have, from every credit card that is a business card, and for every loan. So if you have a mortgage for your building, or say you had to finance a piece of equipment, or any other, like if you have a line of credit to fund business expenses, all of those are things that you're going to want to categorize the transactions for every single month. And so I kind of talked about this a little bit with QuickBooks, but it automatically pulls in these transactions for you. So it's just a matter of reviewing those in your QuickBooks accounting software. And then all you would just do is go through, enter your vendor name, and put it to the correct account. So like your income account, you can get as detailed as you want, or you can just code it to sales. Or like for a coach, if you have different programs that you're offering, you can get really specific on your income. That way you can see which program is producing the most revenue. That way you can see if it makes sense to keep offering all of the different courses and classes that you are offering. And then again, going back to the loans, you would want to make sure that you're splitting out any principal from any interest. So the principal balance is really geared towards just paying down the liabilities, which is actually on your balance sheet. And then the interest portion of that is what is an expense to write off for taxes. And that shows up on your profit and loss. And so a lot of the times I see business owners not splitting this out, and they're either taking the full amount as an expense, or they're putting the whole amount into that loan that they're trying to pay down, and then they're missing out on that deduction. Okay, so then after you've gone through and entered all of the bank transactions, the next step for you would be to reconcile all of your accounts. So for all of those transactions that you have linked, you're going to want to pull the monthly statement. So for your bank, your credit card, and even for your loans. And so what you're going to do is you're going to enter the beginning balance, the beginning balance should automatically pull every single month. So you're just going to want to look at that balance to make sure it matches. And if it doesn't, that generally means that there's something that you need to review that got changed from a prior reconciliation. Then you're going to want to enter the ending balance and the ending statement date. You're going to click continue, and it QuickBooks, because it's really intuitive, it automatically recognizes the transactions that it thinks that it should include in the reconciliation. And as long as all of the numbers match, like all of the deposits total and then the expense total and like your beginning and ending balances, if everything matches and your difference is 0, you're good to go. You can reconcile it. If your difference is not 0, that just indicates that there's something that you need to look at. And a pro tip: do not use the automatic generated account for QuickBooks or reconciliation discrepancies. The reason there's a discrepancy is because there's an error somewhere in something, whether it's an incorrect amount, whether you're missing a transaction, whether there's a duplicate transaction. There's some reason that your reconciliation isn't zeroing, and you really don't want to just write that off so that your balance is correct and you can call it a day. Because by doing that, you're oftentimes going to be overstating your income or understating your expenses, both of which would be making you pay more taxes. And so it's really important to investigate and find the reason why there is a discrepancy there. And so that's also, going back to the reconciliation, that's also one of the most common errors that I find. Most business owners think that as long as they've categorized all of their transactions, they're good to go every single month. It doesn't. And so what a reconciliation is, it's the check figure. It's making sure that everything that is pulling into QuickBooks matches everything that your bank says happens. There's no questions. Everything is good to go. And then again, you know that there's no duplicates or overstated transactions. And so after you've coded and after you've reconciled everything, The next step would be for you to make any journal entries for adjustments. And so two of the most common accounts would be for your point of sales. If you're using QuickBooks Payments, you don't have to worry about this step because QuickBooks automatically codes all of the fees and everything associated with them for you. And it's pretty efficient in matching the payments to the bank deposits and things like that. But if you're using a third-party point of sale software, such as Square or Stripe, you're probably going to need a clearing account to code all of your transactions or all of your income for the month. And then you're going to want to split out with a journal entry, your sales, all of the fees, and so forth. That way, your income isn't understated and your expenses aren't understated. Like Square, what happens is they make all of the deposits into your bank account, less all of their fees. So you're not getting a true picture of what your revenue looks like when you don't use a clearing account and making these journal entries. Because if you're just coding the deposits straight to your sales, your number is going to look a lot smaller than what you really collected. Plus, you're not getting a clear picture on how much you're paying in merchant fees because you're not seeing it come out as a line item on your profit and loss report. You probably have no idea how much they're charging you and how much it really is accumulating to be for those Square fees. So it's really important to make your journal entries for that. And then it's also really important for payroll. And I mentioned again a little bit earlier that Gusto is pretty intuitive. It can map it for you and make these journal entries. But some of the other accounting software, I know ADP does, but it's a little bit more finicky. And I don't think that Paychex offers the mapping. So you would have to do a journal entry for those. And the reason you need a journal entry for your payroll is the service provider that's doing it is going to have a couple ACHs pulling directly from your bank account. One is for the direct deposit for wages, and the other one is for all of your taxes that they're going to collect and hold on to you until they're ready to file that return for you on a quarterly basis. There could be more if you have employee benefits or things like that. But the problem with just coding these straight to wages and straight to tax payroll taxes is that you're understating the wages that you paid and you're overstating the taxes that you paid. Because all of the taxes that you're paying on behalf of your employees are really technically wages. And so this journal entry that you're going to make, at least on a monthly basis, whenever you process your payroll, it's going to allocate those accordingly. And it also helps you track any errors. So by having a clearing account, the goal is to get it down to 0. That way, you know, everything balances and everything is on track and ready to go. So after you have coded, you have reconciled, you have made these journal entries, the next step for you is to review. So there's a really special report that oftentimes isn't acknowledged or publicly talked about, I guess, by accountants, but it's a transactions by vendor report. And so this is really important for you to look at and review to make sure that everything was coded accurately and consistently, because it groups all of the expense transactions by vendor. So then you can go through and see like all of your insurance payments. You're going to want to make sure that they're going to your insurance expense. And if anything was out of line, so say one accidentally went to some crazy account like advertising, you're like, oh my gosh, that doesn't even make sense, you would know to move it. It also helps you verify dates for recurring transactions to make sure that nothing was skipped over or that nothing was overpaid. And so this is really important for like your recurring transactions or those subscriptions that you have for all of your different software and things like that. It's actually how I caught one of my clients' credit cards that there was some, like it got frozen or locked or something. And so then they were missing out all of these payments. I'm like, oh my gosh, like you missed all of these payments for this month. What happened? And so from that point, we were able to create a plan. He knew exactly what vendor they needed to go and give the credit card information to so that they could get those subscriptions going again and they didn't miss out on anything or get their accounts locked. So after you've reviewed your transactions by vendor, you're going to want to look at your financial reports. So you're going to want to look at your profit and loss. And what this is, it's one of the most foundational and the most important financial reports for you because it tells you how much you've made, what you can pay yourself, how much you've sold, and it answers the question, where did my money go? And so to look at this, I like to create, it looks at it's over a period of time. So you can really customize your profit and loss report for any interval. You can do it like for the year, you can do it on a quarterly basis, you can do it on a monthly basis, and so forth. I like to look at my profit and loss by month. That way it's it's categorizing all of the income and expense transactions for each month. That way you can look at it and review trends and growth and make sure that you're on track. And so again, you're looking at it for consistency, you're looking at it for accuracy, accounts that you know are pretty stable every single month. So like if you have software that you know is generally like $100 a month, and then for some reason it's like $200 a month, you're going to want to look at why that expense account has significantly increased from all of the prior months. So it just helps you identify red flags that are going to need to be investigated further. And then it also helps you look at areas of growth. So again, by having like your income split out into specific categories, you can see which course or like avenue of your business is more profitable than others. It can also help you see like how much is left over and calculate like whether you need to increase your prices. There's this really special thing called a gross profit margin, which tells you how much above your expenses your services are. And generally you want to be between 40 and 70%. That's a really good standard number. Anything less than 40%, you're really not charging enough and you should be considering upcharging, increasing your prices. So then the next financial report that you're going to want to review is your balance sheet. A lot of people don't know what this is, but it's actually a really simple equation. So think about it. So it's all of your assets, which is things that your business owns, minus your liabilities, things that your business owes, and it equals your equity or things that your business keeps. And so an example of some of these assets would be like your bank account. If you had your accounts receivable invoices that you've sent out that haven't been paid quite yet, if you have any loans to others that you're planning on collecting, if you have like a business or tools and equipment or anything that is going to like that you could sell to help pay your bills. Your liabilities are things like your payroll taxes that you have to pay on behalf of your employees. Your sales tax is a liability. Your credit cards, any lines of credit, if you have a mortgage to have a building, those are going to be things that you have to pay back. And then your equity accounts, so basically like your owner's draw is all of the money that you've paid yourself. And so as an LLC owner, you can't be on payroll. So how you pay yourself by being an LLC or a sole proprietor is you just take money out, whether that be by a check, whether you withdraw cash from your bank account, or whether you do an ACH and transfer it from your business to your personal account. All of those are quick and easy ways to pay yourself the money that you've worked hard for. And so by doing that, those withdrawals go to a special equity account called owner's draw, and it just lowers the amount. It makes your equity grow smaller. And then your income from your profit and loss, it pulls directly into equity. It makes equity grow bigger because you're earning money. It's growing the value of your business. And so why equity is important is it's basically the value of your business if you ever wanted to sell, or it tells you how much is left over in your business that you can pay yourself from. So how you review this, you really want to look at all of the balances for your bank accounts, your credit cards, make sure that they make sense. And so I got to back up. The balance sheet is it's a snapshot of a very specific point in time. And so if you look at it from like the middle of the month versus the end of the month, the numbers are all going to change because it's based on the numbers for that specific day. And so I generally do these for like the last day of the month. So the ones that I would be working on would be September 30th for my current clients. And you review this by looking at the balance of your bank account, your credit cards, and making sure that they match on that day. And then you also want to review like your accounts receivable, make sure that everything that says hasn't been paid really is still outstanding. And those that are over like 60 or 90 days, you would want to say, am I really going to collect this? Do I need to write it off? What's going on there? You would want to look at all of your loan balances and make sure that they're all on track, the loan balances and then your bank and credit card transactions, those are pretty quick because you've already reconciled your accounts. And so once you've reconciled, you know that those numbers are generally correct. And then you also want to verify your equity accounts. So you would want to go through and review all of the transactions that you have in your straw and make sure that there was nothing listed as personal that was really a business expense. Excuse me for just a second. I gotta take all of my throat. Okay. So those are the basic steps. Just a second. So sorry. And to just give you another overview. So the first step is to code your transactions. The second step is to reconcile your accounts. This third step is to do those adjusting journal entries. The fourth step is to review. So you're going to review your transactions by vendor. You're going to review your profit and loss, and you're going to review your balance sheet. And once you've done those things, you're good to go. Your monthly accounting is done for that month, and then you can wait until the next month to go through the whole process again. Okay, and so then I have one last question that I get from business owners, and that's how do I pay myself? And I covered that really quickly above when reviewing the balance sheet, but sole proprietors and LLCs, you are not on payroll. You just transfer money out of your account at any time in any interval. But the S Corp election, so that's the one where you have a minimum required salary that you would have to pay yourself every single year in order to get those tax savings and to stay compliant as being an S Corp. And so above and beyond that, you are not limited to that salary. So while you have a minimum set, you can still take out draws at any point in time in any interval at random, because that money is still yours when you are an S Corp. So yeah, those are the steps that I have for you that most business owners have. Now, the specifics for your business could change a little bit depending on like your specific business and your needs. But that's a really good guideline for most business owners. So if Teresa wants to come back, maybe we can start going through some of the questions in the group.
Okay, I'm waiting for my image to pop up here. You hear? Oh, I didn't. Oh, there it is. Awesome. Oh my goodness, Drezden, that was a lot of information. So good. I don't know. So we have quite a few people that are watching that have come on and popped off. Lillian's still here. Lillian, let us know if you have any specific questions too. Yeah, Lillian said you provided a ton of information for new business owners and reminders for those of us who've been around for a while. Yeah, so for one, let me just tell you, like you really have a gift for simplifying things, like having it was much easier to follow along with what you were saying with the handbook, the guide. So thank you so much for providing that. Yeah, that was really good. But also just the way that you explain things was easy to understand. I mean, it was still overwhelming in terms of like, if the information is new to you, like it's a lot of information, but I really enjoyed it because it was such a good overview that I feel like from this point, it is easier to start crafting your own questions and like the owner's pay, like that was I mean, you already answered it. So I don't really have a question about that because you did answer that. And I do, like, I wasn't sure if like there needed to be a set amount for an LLC or not, but it sounds like the only one that has to have like a set amount is the S Corp, correct?
Correct.
Okay.
And you actually made me think of another really good point. As an LLC member, you're not taxed on your owner's draw. So you could take as much out or as little out as you want, because that's not what the IRS is looking at. They're actually looking at your profit and loss report. So they're taking all of your revenue minus all of your expenses, in that bottom line, that is what is tying into your tax return, and that's the amount that's taxable. They're not looking at your owner's draw.
Oh, oh, that's interesting.
Mhm.
Huh. Okay. After I stew on that for a bit, I'll probably have a follow-up question about that.
Okay.
Hey, I did want to know, like, could you explain a little bit about quarterly taxes? Because it's
Mhm.
my understanding that, especially if you're an LLC, I don't know about a sole proprietor, but if you're an LLC, you should be making quarterly payments.
Yeah, it really depends on how profitable your business is. And so that when you're looking at estimated tax payments, it's really important that you're working with your tax accountant, because they know the whole picture. So they know all of the personal side, like what your income and tax liability is for all of the different avenues. So like it includes like your husband's W-2 or whatever your husband is doing for a job. And it takes into effect everything rather than just your specific business. And so that's how you can calculate like what your tax percentage is. And it gives you a better idea of what they anticipate you owing at the end of the year. And so what quarterly taxes is it's just breaking up that tax liability that they're forecasting or that they're anticipating that you would owe come next tax season, and it's splitting it up into 4 different quarters. That way it's, one, easier for you to manage by splitting it up into those smaller chunks. And 2, once your tax liability gets above a certain point, if you're not paying the quarterly taxes, then the IRS could give you some penalties for not paying that way. Their reasoning behind that is they're like, well, W-2 employees have to pay taxes every single paycheck. So I think you guys should pay at least quarterly too. And so that's kind of how they're getting their money a little bit quicker, I guess. But again, so like when you're just starting out, you don't have to stress about making those estimated taxes. It's once you get to a certain threshold that you owe every single month, and it can increase. So like, say you work with your tax accountant and you're like, I think I'm going to have this much revenue at the end of the year. And say you had an explosion, your business just skyrocketed. As long as you're doing something, you're making some sort of payment. If your tax bill increases a lot more than you thought it would, you're not going to have those penalties and interest come tax season. You're just going to have to pay the additional tax due.
Okay. Wow, that's good to know. Do you do tax accounting too, or do you have a referral of somebody?
Yeah, I don't do the taxes myself, but I do have a couple people that I can refer you to. I can put their contact information in the comments.
Yeah, yeah, I love that. I love that you have people to refer to. It's so good to have a team of,
Mhm.
worked with. Awesome.
I think it's just so important to be able to specialize in what you're good at. And so by trying to do all of the different things, I didn't feel like I was serving any one client well. I wanted to be able to narrow down and like really focus on helping my business clients understand their finances on an ongoing basis rather than just seeing them at the end of the year.
Yes. Oh, what good business advice. Specialize in what you're good at. I'm going to make that a quote by you. Awesome. Okay. Okay, I really liked the journal part of like you're reconciling everything, and then but before you're done, like having that journal of like any additional notes and stuff, because that is really
Mhm.
important from month to month for remembering certain things and keeping track. It would be difficult to, if you didn't have that journal piece of it, like it would be difficult to remember certain aspects of why things were the way that they were the last
Mhm.
over your records. Okay, so what does it look like to work with you? Like if somebody was like, wow, Drezden really knows her stuff and they want to work with you, like what does that look like?
Yeah. So the first steps would be to finding which package best serves your needs. I do offer trainings for those who want to go through the process specifically for their business. That way I can help you create a plan of like, this is exactly what you need to do. Here's how you do it. And I create that checklist for you, walking you through, showing you how to navigate and really do everything on your own for those who aren't ready to outsource. And then I also do offer for those who are ready to grow and they're like, I don't want to do this task anymore. I want to focus on, talking to clients or serving my clients or like income producing activities. I can outsource that for you. And so because my services are value based, I tailor my package to your specific needs. So not everybody is going to need full service. So you could start out at just basic bookkeeping if you don't have payroll, or if you don't want me to do your invoicing or like paying your bills or those things. So I really customize my package. And so for the outsourcing portion of it, I really need to have a discovery call with you. That way I can get to know you and your business, and I can create a package specifically for you. And then the training program that I do, that I have all of the pricing and benefits listed out on my website as well. That way you can see everything that you're going to get.
Oh, okay, awesome. Thank you. I was reading, we have a couple questions come in. So,
okay, perfect.
Okay. And your website is it just your name? What is your website?
It's palmsprobooks.com.
palmsprobooks.com. And we'll make sure that these are all in the comments for everybody to look at. Okay.
Perfect.
Okay. Let's see here. I'm just going to read a couple too. So Lillian said,
Sure.
The vendor report is super helpful and a great way to catch errors if expenses were put into the wrong category or account. Okay, Carmen asks, can you pay the salary once a year inside an S Corp and not necessarily on a monthly basis?
You can. Yeah, I've had clients who have waited till December to see like how much they want to pay. And then the only hang up I have with that is you have to make sure that you have all of the funds in there at the end of the year. And so at a minimum, some people are paying like $30,000, and that's a lot to try and come out right at the end of the year, in December. So you can, yes. Do I recommend it? No.
Yeah. That's really good advice. Are you familiar with the book Profit First?
Mm-hmm.
Okay. Yeah. So he talks about paying yourself and putting money aside for profit. And so the idea that if we wait at the end of the year, you might not have those funds because you could have tapped into it or whatever. So that's good advice. Lillian says, are you referring to a general journal entry? I was just referring to the part in the guide when you're reconciling your accounts, it says make any necessary journal entries for adjustment. So just any notes about point of sales and payroll. I don't know, Drezden, do you want to say anything else on that?
Yeah, so those journal entries are really going to depend on your business and like your point of sale systems. Square is going to look different than Stripe, and it's going to look different than PayPal. And it's also going to depend on what payments you're taking. So whether you're accepting cash, whether you're accepting credit cards. So the journal entry itself is going to look different for every single business. And same thing with payroll. If you're very simple, there is a general journal entry that you can get, but once you start adding benefits like a 401k, profit sharing, if you're paying for health insurance, those are going to make your journal entry a little bit more complex, and it's going to change it from person to person.
Okay. Are those, are those journal entries something that's like in QuickBooks? Or is this just
so if you have these journal entries, it's best to at least get one training. That way, like every single month, this is how your journal entry looks.
Oh, okay.
And like with the Gusto mapping, once you get it set up the first time correctly, it streamlines it for you so that every payroll you run afterwards, it's you don't have to go in and do that journal entry. It does it for you. But it really takes that first initial setup to be accurate and correct. That way it knows what to do every single month.
Okay. Is that a training that you do then?
Yeah, I can help with that.
Oh, that is cool. Okay. I was just thinking piece of paper. So I'm glad Lillian mentioned something about it. Okay. You mentioned profit first.
Mhm.
Oh, a profit first that you should be over. Can you please repeat that again? I think she's talking about the escort, maybe the amount of profit that you should be over, or maybe that's quarterly. I'm not sure.
So if we're looking at profits, I think that the question might be when we were talking about like what you pay for taxes. So if you're looking at your profit and loss report, it's taking all of your income, things that you've collected, minus all of the expenses, things that you've paid out doing your business. And then it gives you that net line. So the very bottom line is called your net profit. And so that number for the year ties directly to your tax return, and that's what they're using to calculate what you have to pay the IRS in taxes. And it's not the amount that you have taken out to pay yourself, which are called owner's draws.
Okay. So the owner's draws then, but they're still taxed, but they're taxed as income or not?
They're already accounted for in your profits. So you can't really pay yourself if you have no profits to take the money from. Right. So the owner's draw, it's really in the eyes of the IRS irrelevant, but it's helpful for you to know how much you have pulled from the business.
Okay. Lillian mentioned the 40/60 comment tied in with not charging enough. Does that trigger a memory?
The gross profit margin, like the 40 to 60%.
Maybe that's
okay. So if you're looking at your profit and loss report, you have all of your income. There's a very special account called cost of goods sold. And these are all of the expenses that are tied directly with the income that you're producing. Without them, you could not offer the things that you're offering. So the best example that I have, I work with those in the beauty industry. And so in order to do like a hair color, they have to have the actual color that they're putting on your hair to do the highlights, or they have to have shampoo to wash that out. And so they could not provide that service without buying those things. So those expenses are going into a special account called cost of goods sold. And what happens is you're taking all of your income minus that special expense category, and it gives you your gross profit. And so you're using this to calculate that gross profit margin, which is where you want to be between like the 40 and 70%. And if you're below 40%, you're not charging enough to make profit off of, like you need to increase your pricing to make sure that you're covering your expenses and still have enough left over to cover all of the other business expenses that you have for like insurance, for rent, for advertising and everything like that.
Wow. Okay. That's very helpful. She said yes. Awesome. Good. Okay, cool. Well, so from this point forward, I know your contact information is on the guide, but if you could just let people know, like, what is the best way to contact you from here on out if they want to if they have more questions for you, if they want to schedule a call with you, what would that look like?
Sure. So you are welcome to email any questions you have to my email. It's my first name, Drezden, at palmsprobooks.com. You also are more than welcome to send me a Facebook friend request. I'm really happy to have you there. And then you can just send me a messenger in Facebook and I'll answer them there as well. And then like, if you're ready to just book the discovery call, the links are in my guide at the very bottom. And then I also have a lot of great information on the website where you can get like I also have like discounts available. So if you wanted to sign up for Gusto or if you wanted to sign up for QuickBooks, I can get you discounts on those, and all of those freebies are on there as well.
Oh, that's cool. Okay. Yeah. And for our viewers, if you, well, not if you, I encourage you to send her a friend request because she does a lot of trainings just on her her regular profile with live video and stuff. So she's always adding value and educating. And like I said at the beginning, just a resource wealth of information. Drezden, would you be interested in coming back again?
Yeah, of course.
Yeah, this has been so good. And we already have a lot of people, not a lot of people, but we have good interaction right now in the comments. And so I just know like over the next couple days, we're gonna have more questions there. So if like I will make sure to monitor the post and that way you don't have to, but if there's a question, I'll just tag you in it so that you can see it. Lillian, is there a way we can print the guide as a whole versus page by page? So Lillian, you're going to have to do that inside of your,
Is it displaying weird?
Hold on a second. Let me see here. Let's just screen share and we'll see. Okay, so here is, I see what you mean. Yeah, because if you print it, it'll only just who that is.
Can you go to my website? I want to see how it displays on there because I uploaded a PDF version of it rather than the Canva link.
Wait. Your website is
Palms Probooks.
PalmsProbooks.com.
Yep. And if you go to free offers and discounts, it's the very first, the free bookkeeping guide.
There you go. That'll do it. So, actually I can probably even type that into the chat. But either way, I'm going to put let's go back to home. There we go. Yeah. So check out her website because she's got lots of, offers, discounts, abouts. She's got a lot of stuff on here. I'm going to put that in the comments too. And then it has the direct link for the guide. Good question, Lillian. Thanks for asking that. Okay, cool. Well, without further ado, we'll go ahead and close up for now. Drezden, again, thank you so much for coming today. This has just been so good and so informative. And like I said, I know we're going to have more questions throughout the week, as time goes on and people see this. Feel free to, we're not supposed to in the community, we're not supposed to self-promote, but we can educate. So Drezden, throughout this month, especially since you have the algorithm working in your favor inside this group because you're going live, right? And you're tagged on this. Feel free to share more resources or just kind of tips and tricks along the way. We would love to support your business. And, you're a mom of 2 little girls and faith is a huge part of your business and foundation. And at the beginning, you mentioned just kind of listening to God's lead and direction. And so I love that. That's a part of my story too. And so I just want to support you and cheer you on in success too. And so anyway, so with that, feel free to share inside of the group too. And thank you so much. Thanks so much for joining us today.
Of course. I'm so happy to be here. I love the group. I think it's such a powerful community and I really appreciate the opportunity to share this with you guys.
Yes. Awesome. So cool. Okay. Well, Drezden, I'm going to send you a message later today just to kind of recap. I have to do a call now, so I won't be able to stay on afterwards, but okay. So we'll talk soon. Okay.
Sounds great. Thank you so much.
Bye, everybody.